There is a storm hanging over this market right now, a heavy gray cloud that refuses to move, and I can feel it pressing down on all of us who have poured our hearts, our savings, our sleepless nights into this space. But right in the middle of that storm, something extraordinary is developing, something that feels like a single beam of light cutting through the darkness. Major digital assets like XRP, XLM, and HBAR are increasingly finding themselves at the center of institutional tokenization frameworks and legislative conversations on Wall Street. And when I say this is significant, I mean it in the deepest, most personal way, because I have watched this journey for years, and finally, the walls are starting to crack open. Before I go further, if you are new here, please subscribe to this channel, because we are documenting this journey together. Every twist, every heartbreak, every triumph, and I do not want you to miss a single chapter of it. And while you are at it, tap that bell icon, because these moments, these turning points, they happen fast, and I refuse to let you wake up one morning and realize you missed the exact instant everything changed. Now let me pull back the curtain on what is actually happening, because this is bigger than a headline. This is a potential shift in the very foundation of finance. Major asset managers like Charles Schwab, managing trillions of dollars in assets, have publicly aligned with calls for the United States Senate to pass clear market structure legislation like the Clarity Act. Think about that for a second. Trillions of dollars worth of influence standing behind regulatory clarity. This is not some small startup lobbying for attention. This is a titan joining an army of market leaders at a moment when market structure bills face significant political debate and resistance on Capitol Hill. But here is the truth, the raw, uncomfortable truth that I have come to accept. Institutions like Bank of America, Goldman Sachs, Charles Schwab, Fidelity, and BlackRock, they represent the core architecture of traditional finance. Charles Schwab controls over $10 trillion. BlackRock oversees tens of trillions. Fidelity handles multi-trillion-dollar portfolios. When you add these numbers together, you are looking at the foundational machinery of American capital markets. And when institutions of that scale begin pointing toward public blockchains, tokenization, and settlement infrastructure involving networks like Stellar, Hedera, and Ripple's technology, that is not a coincidence, it is a signal. And HBAR fits into this picture just as thoughtfully, with major enterprise adoption and institutional governance paving its pathway into real-world asset tokenization. But why now? Why this sudden institutional focus on blockchain rails? It comes down to economic realities and operational efficiency. Traditional fixed income and corporate bond markets have faced pressure, with billions of dollars flowing out of conventional bond funds during periods of market stress. Capital seeks yield, liquidity, and speed. Investors and institutions alike are examining legacy structures, searching for modern digital rails that can operate around the clock. Firms like Schwab, BlackRock, and Bank of America recognize that adapting to 24/7 settlement for stocks, ETFs, commodities, and real estate requires upgrading the underlying plumbing. This is precisely where networks focused on payments, interoperability, and asset issuance, like XRP, XLM, and HBAR, are positioning themselves. And the broader macro backdrop is undeniably complex. Energy prices fluctuate, inflation remains persistent, and massive technology companies are spending heavily on infrastructure while adjusting to shifting economic expectations. Prominent macro investors who accurately foresaw past financial downturns are taking defensive positions against high-flying sectors. When seasoned investors move with that kind of caution, it signals that structural shifts are underway beneath the surface of global markets. So, when major firms throw their weight behind market clarity and digital asset legislation, it is an exercise in long-term strategic positioning. They are preparing for a financial landscape that demands greater transparency, faster clearing, and broader liquidity. We are now deep enough into this story that I want to pause and ask you something honestly. If this content is resonating with you, if you feel that same spark of perspective cutting through the uncertainty, please take a moment to like this video. It genuinely helps this message reach more people who need to hear it right now. Now let us go deeper, because the institutional integration details matter immensely. Key clearing organizations like the DTCC have announced initiatives exploring tokenized asset settlement directly on networks like Stellar. That represents a pillar of post-trade market infrastructure connecting with public blockchain infrastructure. At the same time, enterprise settlement solutions and tokenization working groups continue to explore digital liquidity rails involving XRP and other enterprise-grade protocols. This is not pure speculation. It is documented architectural exploration happening across global markets. Meanwhile, leading digital asset managers and institutional councils are leveraging Hedera for real-world asset tokenization frameworks, highlighting how multiple protocols can serve specialized functions within a modernized ecosystem. Imagine what this transition looks like as it matures. Picture real estate assets tokenized on-chain, settled efficiently, allowing broader access to fractional ownership without traditional paper bottlenecks. Picture entrepreneurs raising capital through compliant digital channels, bridging legacy finance with open technology. This evolution isn't about overnight wealth. It's about building a financial architecture that operates with greater speed, lower friction, and broader access for everyday market participants. This extends beyond real estate to private markets, pre-IPO liquidity, and global trade settlement. Modern financial markets thrive on continuous price discovery and transparent settlement. Networks designed specifically for low-cost, high-throughput, and compliance-friendly operations are well-suited to support that transformation over time. While this institutional transition unfolds over coming market cycles, staying grounded and patient remains essential. Navigating uncertain market conditions requires evaluating risks carefully, understanding how yield and liquidity mechanisms function, and recognizing that systemic shifts in capital markets take time to mature. Before I close this out, I want to hear from you, genuinely. Drop a comment below and tell me which of these protocols, XRP, XLM, or HBAR, you believe is best positioned to support the broader tokenization wave. I read every single comment, and your perspectives bring real value to this conversation. So as the market continues to navigate this period of transition, remember this. Fundamental progress often happens quietly behind the scenes before it becomes obvious to everyone else. Thank you so much for spending this time with me today. It means more than you know. If this story offered you valuable context, go check out my other videos for deeper analyses into where these markets are heading. And please, do not forget to hit that bell icon so you never miss an update. Stay safe, stay informed, and I will see you in the next one.